Good morning, good morning. How you guys doing today? It's March 5th, 2024. Hope you guys can hear me okay. And seems like yesterday's episode went without a hitch, which was nice to see. No delays. So I'm going to draw a red line, another red line, and another red line. If it is in sync, just let me know. I would appreciate that. I just want to make sure that the settings that I have are good and everything will move nice and smoothly. So just let me know in the chat box, okay? And if you wouldn't mind hitting the like button, I'd appreciate that. The more likes, the more support you show, and I do appreciate your support. All right, so I asked you guys if there's any charts that you'd like to look at, and you guys left me with some names. So we'll take a look at those after the initial look at the markets that I wanted to do today. All right. So we have the S&P 500 that is up right now, and as you can see, it's being making all-time highs, which is really nice and beautiful. And actually, it's falling just short of hitting my long-term target of 52. So we'll see whether or not it wants to get up there. We have some time for this to play out. I don't think it's done with the rally just yet. And if you take a look at all the charts, we have really strong moves to the upside. Now, in our school, we talked about the dynamics of what was taking place with price. And, you know, even though price is moving upwards on the smaller time frame charts, we don't have very good structures being built. So that leads me to suspect that, you know, once this buying discontinues, price is going to drop quite dramatically, okay? Because if the banks wanted to sustain this movement up for short, medium term, they would be creating the structures to support it. But I don't see those structures being created to support it. All right, let's quickly look also at the Nasdaq and see if there's any significant things that are the same as the S&P, and there are. You know, here's a daily chart of the Nasdaq, and you know, significant institutional buying is down here. Okay, and this is the daily chart. So if price was to come down, as you can see, we have a trend line crossing here. The trend line would be breaking before big institutional buying would come into play. And so that's not a good sign for this to hold. I won't go into details as to why, but I'll just leave it at that. This is not a good sign for it to hold. So yes, you can see buying coming in, right? But this is all happening live. So nobody would know that this buying is going to come in until it happens. So what I'm saying is that the last area of significant buying that we know existed for a fact is here. And if price was to get down here, the fact that this trend line would be broken would mean that price would very likely drop through here and continue lower. Okay? So that's what I see with the Nasdaq. Now, when we look at the Dow Jones, this is what we've got, right? Not the greatest structure to the upside, but very strong on the monthly. Very strong on the monthly. We had 1, 2 big momentum candles to the upside, basing, small little momentum. Sooner or later, it's going to drop. If we look at the structure of price here and we see this arch, okay, and now we get this one, it's just a matter of time until it comes back down. But again, the problem is the latest area of significant buying is here. All right, this is the area of significant buying. And the more price goes up and up and up and up, it's going to cross a certain certain threshold. And that threshold is right here. So if price was to drop now, then we'd have a good chance that price is going to continue going higher in the Dow. But once it crosses this threshold here, the chance of it continuing higher after a significant pullback is greatly reduced. All right, so I'm just going to leave that with you. I did see an article the other day where the top CEOs and executive staff of what they call the Magnificent Seven stocks are dumping shares at record amounts. All right, so we're at all-time highs, but the top 7 big corporations, their internal CEOs and executive staff are unloading shares, which makes me really question what's going on here. And let me bring up some data here for you. Here's another interesting thing. We've been talking about this for some time now. I track the positions of the institutions on major assets, and this is a spreadsheet outlining all the positions of the big institutions in the S&P 500. And, look what we have here. Okay, I've been pointing this out for quite some time. This is as of December 19. We saw a massive increase in short positions on the S&P. Why December 19? What was the significance of that? Well, that's when contracts expired, right? So contracts expired, they need to be closed out, new contracts need to be opened. And a lot of times what we'll see when contracts expire and new ones begin is we'll see a significant shift in positioning. So since December 19, there's been a significant increase in short positions being acquired. And so, this is something that I've been pointing out for some time now. If you look at long positions, December 19, they were 248, and now they're 298. Okay? A little bit of an increase, yeah. Well, to get the market to go up, you do need to buy, right? But as they're buying, 444 and 522, that's significant. So this rally up is seeing an increase in short positions being acquired. All right. And you put that together with what I'm seeing here with respect to a lack of proper support, proper structure to support a continued move to the upside. It's like the banks are focusing on adding shorts, which would completely explain why there isn't a proper formation, upward trends, proper structure that we would normally see in a move that is to be sustained. It's because they're not focusing on making a sustainable move. So this is concerning. It should be concerning to anybody who is long the S&P 500. Now, there'll be certain stocks that will perform very well, even when the stock market is dropping. And the key thing is, how do you find those stocks? Well, later today, in a few minutes, we're going to take a look at one of those stocks that I purchased last week, I think. Last week I purchased. And it's doing extremely well. And I expect it to continue to do extremely well, even if the market was to pull back. So let's take a look here in the chat. You've got some gold, euro, pound, Bitcoin. Okay. All right. Well, let's take a look at Bitcoin, shall we? What's Bitcoin up to? So Bitcoin is running right up to the top of that supply. Well, this is a good sign for strength. You remember what we were talking about yesterday with respect to, what's that stock? Let me see. GBTC. Okay. I might have been speaking about this with my members. I think it was in the member section, in the member video that we did yesterday after our level 2 class. We were talking about GBTC. So GBTC is the largest ETF that represents the price of Bitcoin. And what I noticed here was that these areas were being taken out, these highs here, with great strength. And I was saying, you know what, if this is any indication of what's to come with Bitcoin, we are likely going to see Bitcoin rip through that area of supply and continue higher. And so today you can see that price is inching very, very close to the highs of price and breaking through that supply. This area of supply here that we had located inside of that other supply has just broken through. So this is actually a very good sign that this supply here on the monthly is going to break through as well. Because if we look on the weekly chart, we don't have any supply here. So the only supply that's holding price down, or that could hold price down, is this monthly area. So this is looking really good for a continued move higher, right? So if that's what you've got your eye on, then things are looking pretty good. Okay. All right. Let's look at yeah, Mara. I just wanted to take a quick look at Mara and see what's going on here. Mara was the one that was dropping from the daily area of supply. Remember, we mentioned that they came out with earnings, which drove price to the downside. Now we're responding to demand. It's sitting sideways. I think it's likely we're going to see some pressure to the upside building. All right, SMCI. Remember I told you price was opening up above the supply zone here on the daily chart. And that typically when that happens, it uses that supply as support. So watch for this area to be supported and watch for a move to the upside. Let's go to the Euro US dollar. Nothing really has changed with the Euro US dollar since the last time we spoke about it. 70% retail sentiment at this point. Okay, right here. And let me just quickly look on my chart and see on my FX book. 68% right now, it looks like. Let me just refresh that and make sure. Yeah, 68%. So, I mean, not much going on here, right? I'm not overly excited about this chart. It's not the time to be trading it, in my opinion. It will be, but it's not. And until a significant move happens, it's not of any interest to me. You could see retail traders are trading this. They're wasting their time. Okay, in my opinion. Look, because they're adding shorts as price rallies up. And then they offload their shorts. Then they add shorts as price rallies up. And then they offload their shorts. They're constantly losing money is the point I'm making. Okay. And then they add longs when price goes down. They lose money. They add longs when price goes down. They lose money. They go short when price goes up. Do you want to be a person that's constantly losing? This is not a market to trade. Once they establish, oh, there's a range trading here, then, you know, I should just short at the highs and go long at the lows. Since I've lost money every time I went short and long and short and long and short and long, then when they establish, oh, there's a range happening here, why don't I go short at the highs and long at the lows? Well, when they get to that point, then price comes down. Now they start going long. What happens when they see price drop even further? They add to their longs, and then they add to their longs until they say, oh my gosh, I've been wronged. Let me go short. And then what are the banks going to do? Rally up price. Okay, so I don't fall into those traps. I stay way clear out of those traps. I'm not going there. Until something important happens in this market, I'm not going to trade it. I already traded it. I had a $1 million trade short, made some good returns on that. Now I'm just sitting and waiting. We got some data coming out on Thursday, so I'm going to wait to see how that data sparks a move on euro. Okay, until that happens, I'm not going to do anything. Yeah, do you think they are all waiting for Powell tomorrow? I don't know. Maybe, maybe not. I'm not sure. What I can tell you is that the retail becoming aggressive with euro is not going to spark a move into euro, okay? Because it hasn't during this ranging period. So what it's likely going to be is the banks are going to make a significant move on the euro and really drive price in either direction, up or down. My bias is down. And then when that happens, the emotion will come in, retail will start trading heavily, and then we'll start to see the path that's being made. Okay, until that happens, I'm not trading it. It's not a good time to trade. Okay, gold looking pretty good. We talked about this yesterday in our class with students. I went into some great detail with regards to what we're waiting for. This is a decent move to the upside. Yeah, it's decent. But I'll tell you that it's very weak. This move to the upside is very weak. Okay, again, it's a nice move to the upside, but the structures that we look for, that we know the banks create when they're looking to support price, they're not being created here. All right, and that's the issue. So I'm not too excited about what I'm seeing here. Retail traders, it looks like they're 81% now, so they just dropped their number down by 2%. So I'll make a little note here. By the way, hit the like button if you get a chance down below and show your support for what we're doing here for you. I would appreciate that. Thanks. How's the streaming experience been? Okay. I'm getting a message here that it might be slowing down for some reason. Yeah, not too sure, but I hope everything is streaming well for you guys on your end. So yeah, it's not looking so great with gold. Yeah, we get a nice move up, but it looks to me more like a trap. Okay, so I would be careful. I do want to talk about my little baby, TGT, I should say, Target. Target is one of those earnings plays. We saw price coming in, and we noticed that the big players were significantly buying here. Okay, buying here, buying here, buying here. They were acquiring shares of Target, and so I was very excited about that because I figured, with earnings coming out, they must know something, like they always do. So if they know something, I'm going to participate in what they know. And so I waited for the signal to be presented, which was here. And I tried to buy there, and then I was having problems with my trading software, so I got in just a little bit after that. But I got in, and so now today we have earnings. And they're extremely positive. And lo and behold, look where price is now. Straight up to 162. So going to have a nice profit this morning when the market opens at 9:30. And pretty happy about that. And yeah, that's pretty much all I got for you. We're done. It's 20 minutes after. I think I've covered enough. Hope the streaming experience has been okay on your end. I want to thank you for joining me this morning. I hope this was helpful in preparing you for your day ahead. And that's it. I'll leave you with that. Enjoy the rest of your day, the rest of your trading, and we'll talk to you soon. All right, if you don't know about the new special that we got going on at the school, I'll leave this screen up for you, and you can have a read. We got a really nice discount available. A 6-month discount for 6% off, and a 12-month discount for 12% off. So I'll leave that there if you're interested in signing up and becoming a member with us. All right, that's it. Take care. Enjoy your day. Bye-bye.